Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Hi, and welcome to StockInvest.us podcast for week 30. For more than a year, I've been giving you these podcasts. I have made them in the car while driving. I have even made them at the office, studio, but most of them are made at home before going to work every single Monday. Today they are doing construction works above. I hope it will not interfere the sound too much. But it's like stock trading. You have to expect the unexpected and work with the conditions like they are. The other thing I have to do over this last year is trying to understand all the techniques behind doing a podcast. I've got a new microphone. I have set up a mini studio, but still there is more to go. The most important is, of course, the content of these podcasts. And usually I do it in this order. I give you an overview of the market that was last week, what I told you, how it was supposed to go in my opinion. I give you a forecast about the week ahead, what to look for and how I think it will go. Then I go by some big tech companies, doing a quick analysis of this. And in the end, I tell you a little bit about my portfolio. I have 7 portfolios, but I give you an idea about my high risk portfolio. I've been thinking a lot, and over the next few weeks, I'll start to change the podcast a bit more because it will be more useful for you if I pick stocks, which I think will perform good during the week. So that will be one of the forthcoming changes, that I will put more attention to stocks, which I believe will do good in the forthcoming week. Anyway, we got to start with the usual routine and look at what happened last week. And last week I told you I believed it would be a good week. As I said for some weeks now, I think that we are heading on for a mini rally. And in many ways we are. Nasdaq is very soon at 15,000 points, just as I imagined. But I also said I'm not sure if it will stop at 15,000 or go straight to 20,000. It can be both. I got this small feeling, this hunch that it will push quite higher and that we will go into a very, very nice rally at the end. But I also think that there will be a brutal end. It's just when. Will it be in 1 week? Will it be in 3 weeks? Will it be next year? It is very hard to say. There are some things already showing both in the charts and in the fundamentals that we are somewhat close to the end, but I don't think that we are there yet. So I'll say it straight up. I think it will be a good week ahead of us. Last week, Nasdaq moved from 14,427 points up to 14,837, getting close to 15,000. That was a gain of 2.84% last week for Nasdaq. Dow Jones did 1% and ended just about 35,000 points at 35,062 points. But what we do see and what we have seen before is that the end of a market, stock picking get much more selective. And most of you, you are trading penny stocks, you are trading less volatile stocks, you are trading less liquidity stocks, and of course some of you are trading these big tech stocks like Apple, Facebook, Microsoft, all of them which have been doing very well. But usually the most common thing among traders is trying to chase the possible good profit, and then we take the risk. And over the last few weeks we have seen that the risk stocks have really been struggling, and some of them even fall pretty hard, I would say. And this is something that I think we can expect further, maybe into this week as well. But I also think that we'll see more money floating back to risk stocks as more people think that the stock market again will be heading up. And some of the things I like to look at is, of course, the 10-year Treasury yield. It measured the inflation rate. Been mentioning it in all my podcasts lately, and it keeps falling. It's 128 right now. It's a huge disruption between what is really happening in the market, where prices is going up everywhere, but the interest rate is going down. And while speaking about interest rate, on Wednesday, Fed will have meeting and make a decision. I don't think they will change the interest rates right now, but we are soon heading into a situation where Fed will start increasing their rates, but I don't think it will happen on Wednesday. Anyway, Wednesday you can expect news, and this will of course affect markets somehow, but I don't think too much. The other thing I like to look at is how many buy signals, sell signals is across the world. And right now, 21% of all the tickers that we analyze at StockInvest.us is 34,000 of them is giving a buy signal. 18% at Nasdaq, 24% at New York Stock Exchange. And this is very low. And as I told you in both the previous podcast and the podcast before that, I like it. I like the situation where we are now, where things are going somewhat steady, I would say, and you get to a low number of buy signals because the market is not overbought as it is right now. It's not too high on buy signals, and that just gives a very good room for rapid growth. I think we will head into, last week was almost 3% for Nasdaq, and I think it could even be 3, maybe 4% this week, unless some other big numbers will scare the market. And what do we have to look for? Well, it is a quarter season. The companies are reporting their quarterly results. And this week we will have Apple, Microsoft, Amazon, Facebook, and Google. Some of these major companies will announce their results. Of course, if these are very disappointing, we can see decline in the markets. They can affect on the stock market, of course. But the ad market, which most of these companies operate in, is being very strong. That was shown in the Snap results last week. They had very good advertising income. And for instance, for Facebook and Google, we expect to see good results actually. And Microsoft and Apple been doing good, and Amazon been doing good in the pandemic, which still continues. And now it talks about, of course, Delta virus and possible new lockdowns. You can expect that these companies will do somewhat the same. Oil, which we keep following, is at $71, totally unchanged over the last week. I think it will go a little bit more down. It was up at 76, but then, as expected, OPEC decided to increase the production. I think they will continue to increase the production because $71 for the oil price is, in general, very, very high. And if you are an oil investor or you are thinking about stocks where to buy, remember that most oil companies, they produce their oil anywhere between $14 and $40. That's usually the production cost. Depends if it's shallow sand, if it's the North Sea, or even if it's down in the Arabic countries where they get really cheap oil up from the ground with less hassle. So these companies are really making huge money, and you will see they will invest. I have an oil portfolio, and I was early into oil, and that just went so good. I have reduced my exposure a little bit because I expect oil price to go down. But what the next thing is that you will see is, of course, that businesses connected to oil will do good, because after tightening the screw and not spending as much money as usual during low oil prices, the oil companies are now reinvesting. They have to reinvest, they have to upgrade. And you will see that these subsidiary companies of the oil industry will do good as they will receive more orders. So you can hunt, in my opinion, some very good bargains around these kind of companies. And personally, I am into Petro Geoservice, Norwegian seismic company, because they are in what I consider to be a good business with a good upside. I'm also into the major oil stocks and will continue. But as I said, for the main oil portfolio, I have started to reduce a little bit, simply because I think that the oil production in general will increase and the oil price should go more down from current level. But again, just to make this long story even longer, as I said, since day one, I believe oil will have a peak up to $100, a short peak up to $100. There is only 5 months left of the year, so it has to happen soon. But I think there will be some sort of conflict and oil will pop to the 100. But in general, I think that the oil should be anywhere between 40 and 60, in my opinion. I think that we are right now heading downwards to the 60 level. What else is there to look at? Well, gold keeps steady, changed only $2 last week, still trading around $1,802, and I believe that oil will continue upwards to 2,000, which it was some months ago. I think gold will stay strong because even though the treasury yield is low, I think there is enough uncertainty in the market to stick to gold. Before we jump on to what really matters, a few more numbers. Thursday there will be job numbers again. This is a day that can change the market. It can very well be that we will have green days all the way to Thursday. Job numbers come in and Thursday and Friday will be red. Anyway, keeping an eye on Thursday, I expect some movements. I think again the job numbers will disappoint in the United States. But I also believe that the market somewhat has this discounted into the price right now. So I don't think there will be too big changes. The reason is, of course, the lack of employees. And in general, that we have seen the rise of Delta virus, which causes another disruption in market as it has during the last almost soon to be 2 years coming up. Let's finish the signals and then dive into some of the big tech stocks and crypto. And if you look at Bitcoin right now, well, you can see that Bitcoin is at 38,000 right now. So we are on the target as we were hoping for and planning for. I believe Bitcoin will go up, and I will reason more later. But London and Frankfurt in Europe are at 26% buy signals. Also here is low. If we go to the east, to Tokyo and Shenzhen, we will see a little different situation. Shenzhen's been the highest of them all for a few weeks. Very strange situation because it was just the opposite 6 months ago. Then Shenzhen was extremely low and I said that it would just continue upwards. Now it's 34. It's not very high, but it's the highest of them all. So that's the signals across the world. There is nothing scary in the picture as I see it. You can find all these numbers going to StockInvest.us and you will see a market indicator where we just show you the amount of buy, hold and sell signals for the given market and also for all stocks across. We even have a list called horse indexes. I recommend you to dive into these because these are also very nice indicators for the market as such. And that brings us straight to the stock analysis, and we will do them very quickly this time. I can say straight up that GameStop was the only stock getting close to the target. The rest performed better than I thought, except Tesla, who ended the week at 643. I'm saying that I believe Tesla will go up to 710. But we will look at Apple. And last week I told you that I believed Apple would have a correction by the end of the week, and that total natural correction, nothing scary. And Apple actually had a correction. It fell the very first day, but it was only the first day before it started to climb again. And if you look at the chart, Apple is down from being overbought on the relative strength index. Things look way much better now. It's still in the upper part of the trend, but in general, things look quite good. So that short correction, which I expected, ended in the middle of the trend. It did not go all the way to the bottom of the trend. I was expecting Apple to maybe hit as low as 140, but it went to 143, 142.70 or something before it pushed upwards, ending the week, as I said, at 148.56. For the week ahead of us, I think that Apple will move sideways between $140 and $152. Q results can change anything. Keep that in mind. Usually it does. And if you want to see how, for instance, did Apple do on previous Q results, you can go to our page, type in the ticker Apple, look for the tab called Earning Reports, and you will see last 3 quarters for Apple. And if we go 3 quarters back, well, Apple increased on the release day. And the quarter after it fell, and the quarter after that it rose again. In general, I can tell you that usually Apple after Q results increases, and it increases quite well. You'll find much more information. Just go to our page, as I said, look for earning reports, and you will find some statistic what usually happens when Apple releases Q numbers. Going back to the chart, as I said, I believe it will move sideways simply because it's getting very high. It's already almost back to the top of the trend. I don't think it will break the trend. It's way too good. I don't think it's possible to push more momentum, and the volume is really not following the stock, so that underscores the things that I try to say, and that the stock should move. But I don't think, given all the support at 145, that it will fall very much either. Buy signal, short-term moving average, long-term moving average. Everything is looking very gray. Should it fall below 145, it will go to 143, later 114, 135, but I don't see that coming anytime soon. For the week as such, I think that the stock will go higher, but also fall a little back, and that it will end somewhere close to where it is today. So the target for Apple for this week will be 148, so we keep it unchanged. Microsoft, I said, I believe that the stock also will have a correction downwards, ending the week at $271. That did not happen. Apple actually moved much better than that, ending almost at $290. And if we look at Microsoft, we will see somewhat the same picture as we just did in Apple. Nice trend. Buy signals from the short-term moving average, buy signal from the long-term moving average. The volume is really not following the stock, but it has no resistance above today's level, and that gives the idea that it can just continue. If it falls backwards, it will find very good support at 280, so I don't believe it will fall deeper than that this week, and that it will trade somewhere between 280 and 297 for the week as such. And that it will end somewhere close to today's price. So there is really nothing risky to see in this. I just think that they have taken out a lot of potential, and the volume also indicated it's still high on the relative strength index. But as I also said, as you can see in the chart, when being overbought in the relative strength index, things can just go very high. And they for sure did in Microsoft, who went from being overbought from $262 and straight up in $280. So for the week as such, I believe that we will see Microsoft going up, a little bit down, but by the end of the week, at Friday, I think it will be somewhat unchanged. So we will keep $290 as target for Microsoft. Then it's Tesla, and what will Tesla tell us this week? It tells us that there's very good support below. It struggles a little bit with all the resistance above. I mentioned this to you before, the resistance from 660 all the way up to 680, later up to 710. The one very good thing is that the volume is following the stock. The stock is falling, the volume is falling. I like these things. It's just about where will it pick up support. And as I believe I said last week, it finds very good support at 630. I believe this will be a very good buying opportunity if you can buy the stock as low as 630. I started telling you to buy the stock when it was 560, saying that it should push upwards. And I think that right now it will turn upwards again. Has a buy signals from the long-term moving average, but a sell signal from the short-term moving average. And this is this troubling resistance above that is. It's also very low interest right now. Nothing in the chart indicates that we will see a real push. So my target for 710 seems hard to reach this week. I still think that the stock will go up, that it might drop down to 630 and do a rebound, struggle with the resistance at 660, later at 680. So I think it will be hard to push much higher than this unless there are some very good news or a very, very good market. Anyway, I think the volume is as low as it can get, and usually when volume gets this low in Tesla, it is a buying opportunity, because usually when interest and volume picks up, the stock goes up. So I think there can be some easy, anywhere from 5 to 8-9% to pick in Tesla during the week. I'll put the end target at 680. Then is GameStop. Last week I said I believe GameStop will end at 190. It ended at 180. The reason I do a quick analysis of GameStop is, of course, these meme stocks are so popular and a lot of people are invested. The short version for GameStop is that I think that there is more positive things to come from GameStop. And right now there is really no resistance all the way up to 210, so I think that gap will be closed very fast. I think that is the most obvious thing for the week, seeing GameStop going from 180 to 210. Support just below, buy signals from the short-term moving average, a sell signal from the long-term moving average, and the volume is very low. It's following the stock down, and I like this. It's just about the right condition, and the stock should move up. But big support, big resistance from 210, 220 makes it hard to break these levels this week. On the downside, very good support where it is, later at 170. If it falls below $160, things can get very bad. So these are also numbers that you want to keep an eye on. But for the week of as such, I think there is good things to come in GameStop. Last week, the target was 190. This week, I will move it to $210. So I believe it will be a green week for GameStop. I can argue this in much more ways than I already did. But just go in, have a look at the chart for yourself. You will see there is really no accumulated volume between 180 and 210. So that should go very fast. Volume is very, very low, actually extremely low to be GameStop, and I think that the stock will get little attention, and that little attention will exactly do what it is supposed to do, to push it up to 210. So there can be some easy picking. Just make sure that you keep your stop loss. That brings us to Bitcoin and Dogecoin. And as I told you for weeks, I believe Bitcoin and crypto will go up again. I told you last week that if it goes below 30,000, it can fall very, very hard, very fast. Bitcoin was flirting just under 30,000 during the week. I think I saw it at 29,600, not sure. But you need these significant breaks. It was not enough to push it down, and now it's pushing up. Currently, as we speak, it's traded at 38,300, so it's really moving towards the target. I had a target of 37,000 till Friday, since I always keep the Friday. So I was right if we are talking about today, but target was for Friday, and that Friday Bitcoin ended at 33,600. The main thing is the direction, and I think that now we will see Bitcoin go back to 60, maybe 70, could also be on the way to 100. Another thing I personally really like is when you see all these people start to talk negative about Bitcoin around in media, different places, usually the opposite happens. And I think Bitcoin will go up. You can look at the chart yourself. It will face lots and lots of resistance from 40,000 and upwards. So I don't see things go very fast unless there will be some extremely speculative news. But I think Nasdaq will do 15,000. I think there is a fair chance that Nasdaq will really rally, go very fast, and it will pull Bitcoin and all the other cryptos alongside for a new nice run. I have to remind you that I am a little bit biased in this, because when Bitcoin fell to 30,000 a few weeks ago, I bought back into crypto because I think it was a good buying opportunity. And that is usually how I trade. I wait for things to happen, and I can sit long. I don't expect things to happen the next day, because I've been so long trading that I know that you really do not know when things will happen. Right now, the profit in both Bitcoin and Ethereum for me and XRP is very good as is, but I believe it will just go higher. At some point, I will just sell out and be sure that if it falls below 30,000 in a proper way, that means 27, 28, I am out. I'll take the loss, but I had the previous gain, so I've got plenty of things to do. Dogecoin did not manage 25 cents. That's what was the target last week for Dogecoin. But look at the chart and you will see what I mean. Everything indicates that the crypto is flattening out, and Dogecoin will be pulled by Bitcoin like most other of the cryptos will be. So in general, looking at the cryptos, all of them indicate the same thing, that we are on another upturn. Where will it stop? So hard to say. All I know, it's facing lots and lots of resistance, so it will not be the fastest ride you've been on to. I think it'll be slow, but steady. And when we get to 50,000 on Bitcoin, people will start to think, oh, maybe it's a good time to buy Bitcoin now. And you do the same mistake that most traders do all the time. You get in too late. You want to be first in, first out FIFO. That's your trading strategy. You have to be in before things move, and you have to get out before it tops out. But human nature works like that. We want to be sure, and usually you wait too long. The train is far off the station. You try to run alongside, just ending with losses. But I don't see that loss coming very soon for the crypto. And that brings us to the very last part of this portfolio. We're already 26 minutes into the podcast. And for the last few minutes, I will just tell you about my portfolio. And it is the high-risk portfolio, consisting a lot of penny stocks and stocks that moves a lot. And it was doing extremely well for a very long time, but been struggling for the last few weeks. Last week was somewhat good. The week before was really bad. Lots of the stock been triggered by my stop losses. So the different valuations I have in the different stocks have changed. Some I've rebought back at lower levels, doing something called accumulations. Other I have just reduced my exposure. Anyway, Diffusion Pharmaceuticals, really disappointing, and I don't see any good news coming from Diffusion Pharmaceuticals right now. They have the product, but they don't have the management. And somehow they managed to put the news on the worst possible things. But it's a nice product, and it is just a small gamble that I have running. But I don't think this week either will be the week. I thought 2 weeks ago that it will head straight back up to 1 because everything was suited for it. Didn't manage, and now it's all the way to 54 cents. So it's getting close to my buying levels actually. Over this long run, I more than 3 times accumulated what I started with in shares. But last week was not yet another week with loss for Diffusion. NEO did a little bit better, ending the week at 43.99. It was trading higher, but as I said, I believe green technology will just continue. I think NEO is very well suited. May not be this week, but if it's not this week, it'll be next week, because you will see America push towards the new Green Deal. It will happen no matter what, and electric cars is the future. Of course, you can argue that you can buy General Motors or other companies that also are getting along now with very nice cars and very good technology, but I believe there is much more to come from NEO and even Tesla, but not as much in Tesla because it's very highly priced. And over the last few years, Tesla had to face a lot of competition, and they are just doing the same market that Tesla had to dig to open up for everyone. And they are doing it with good capital, with good cars, and with good technology. So it's called something like the second follower, it's called, and it's a strategy where you let someone else break the market and then you just go in and take advantage of it, you skim it. And I believe that there will be so lots of electric cars, and that a lot of the governments around the world will just push news that they will enforce laws cutting down fuel fossil and pushing people more and more towards electric cars, and even order big orders like United States did, ordering 1 million electric cars. Arbutus 276, just a little bit up for Arbutus last week. Ur Energy 115, so it was up 10 cents over the week. Velocity Energy, this lottery ticket, had a few movements last week, but ended at 5 cents. But I think that again we are into a situation where we'll see small fluctuations in this. It's not even penny stocks, it's a pink stock, which can go both ways. Okugen ending the week at 6.94. It was traded above 7.60, I think, during the week, and I think it will just continue upwards in slow pace. All of these stocks are very volatile, and you have to keep that in mind, that when you trade, and this is the high risk portfolio, by the way, you have to expect huge movements. That was the portfolio. We are 30 minutes into the podcast. It's time to end it. For those of you who have been following me for a very, very long time, I hope that you have learned a few things over all these months, over all these podcasts. I will repeat them since I like to repeat, and I think it's a thing that you should know. Make sure to have a stop loss. Never let the stock drag you too far down. Selling is the hardest part, and doing a stop loss will really help you. Make sure that you keep the stop loss in accordance with the volatility of the stock that you trade. If it's a very volatile stock, you don't want 3% stop loss. You might want 15% stop loss. I personally love something called trailing stop loss. When a stock is moving upwards, the stop loss is also following upwards, either set by a certain amount, like for instance it keeps $5 below the high all the time, or by a percent. Most serious brokers use this, offers this kind of service. It's excellent, and when you hit one of these runners, and eventually you will do, you probably already have had a few runners, you will enjoy the ride as long as it lasts, and when it tops out, stocks will be sold and you don't have to go all the way down again. The other advice is that out there is so many people pushing stocks, usually with an affiliate link, most of them to Forex or other easy trading solutions. These trading solutions usually offer you gearing, meaning that you just have to invest $100 and you can trade for $1,000. Sounds very nice, but no meal is for free. It's the way to lose money. Try as much as possible to trade with actual money, your money, and it might be a slow ride, but build penny by penny. Because if you do gearing, and I'm pretty sure that a lot of you already have, you will see that things move very fast. You have to cover your calls, so your initially 100 or 1,000 or whatever you put in get eaten up in just an hour. You have to add another 1,000 or 100, but you are in fact with 100% loss. Unnecessary in stocks like Okugen, for instance, who can do 20% swing in a day easily just to see the stock get back up. So you lost all your investment. Few hours later, you're watching the stock and you see it's far up again. You did the right pick. It was just a circumstance causing it. Go for solid brokers. E-Trade, Ameritrade, go for some of these solid brokers. Usually a little bit hassle to get the bank account because you have to prove your passport, you have to prove your ID, and there is different rules for things. It takes 3 days to set up the account. But what you get in the end is much better than doing some of this, I would call shady deals, which is all around promising easy money. There is no real easy money. I have seen stocks go up 20 times. I have seen stocks fall 95%. And you will, over a long trading life, see the same. Next week, I will look for some possible good buying candidates for the week. But here is the last tip of the day, so you also can do a better trading. Use our services. It's totally free. Just look at the charts. As I told you, for instance, for GameStop, there is no accumulated resistance. Accumulated volume is just how many shares were bought and sold, for instance, at $200 in GameStop. Very, very few. There is no people sitting there waiting to sell the shares to get back their losses. And that is why it's little resistance. Try to find stocks which have good support below, very little resistance above, and you can do some nice scoops. And don't always try to chase the 50 or the 100% gainers. Remember, 10% is really a good gain. If you can keep doing 5-10% every single day, it will really amount up to big money over time. That's it. We are getting close to the end of July. I hope you had a very good summer so far. And remember that there is more thing to life than just stock trading. Enjoy the sun, enjoy bathing, walking trips, whatever you like to do. Personally, I like to go with my metal detector. It's a super interesting hobby, and maybe I will share some finds with you in the podcast. And remember, you can send me email, jim@StockInvest.us. If you have some questions, or you want some more tips and tricks, or you want me to enlighten something else in the podcast. Podcast is also available on YouTube. Gets out on YouTube a few hours after it's posted on Spotify, etc., where you can see it with text, because sometimes it's a little bit hard to understand what I say. Remember, I'm Norwegian, I'm not English by nature. I live in Vilnius, which talk Lithuanian, which is an extremely hard language, but I will learn that as well. That's it. Have a nice trading week, and we will speak again. Bye.
That's the end of this video. Thanks for watching. Leave a comment if you have any questions, and don't forget to subscribe to the channel.